Hey guys, just a super quick one today. I was not planning on doing a video, but something came up I have to talk about. I got an email and I want to address it because it's a question that a lot of you have. Also, I want to talk about what's going on in the stock markets and when is it time to get back into some of these gold mining stocks. Plus, I was trying to make a dedicated video about the number one trading tactic of all time ever. And it's just not going to be a dedicated thing. Let's talk about it in this video with everything else. And you're going to want to keep abreast of all of this information. So subscribe to this channel, please. And if you click like, that really helps us spread the message. You know that there's people that will benefit from our message, that you can help just by clicking like. Another down day on the market so far today. I'm going to take a look at, sometimes it helps to sort of take a step back and take a wider view of things so you can understand what's going on more, because you look at the screen and everything's red. And it looks like there's a massive panic. But then when you look at the big longer term time frame on the chart, it's completely a different story. However, I wanted to show you a few of the charts here. This is the NASDAQ, and you see here there's a drop off there. That is a warning sign. The fact that shares opened here, closed there, the next day they opened at a much lower level. The reason there's a space here is because the market was closed. But they didn't pick up where they left off. They actually jumped even lower. That's a bad sign. In terms of the momentum, for sure. And here's the 2-month chart of the Dow Jones Industrial Average. And you can see here, it also dropped off there as well. These are very bad indicators. And what they're saying is that the downside move is not over yet. Let's look at the Russell 2000. You see yesterday, it opened here. Traded that high, and then it got pulled lower throughout the day and it closed right there. The next day it opened where it left off and it's done nothing except for decline throughout the whole day. And if you zoom into a 1-day chart, you see what it looks like. And here's the Standard & Poor's 500 1-day chart, 2-month chart. Boom. The markets have all ratcheted down. They've all just dropped through nothing but air, nothing to slow them down. This isn't implying that we're going to be heading a lot higher from this point. And this was the email that I received this morning that inspired this whole video, which I wasn't even going to film. Hi Peter, I held positions and I'm going to cover over the names of the stocks because those are reserved for subscribers to the peterleeds.com newsletter, world famous stock picks. So these 3 stocks he mentions, that one's already tripled. Those 2 are both 10 baggers. But he says, I sold them for a nice profit recently, thanks to you, by the way. I see they're trending down now a little and was wondering your thoughts on the bottom of these to get back in, or if I should wait a little bit more before jumping back into them, like after the election. Any thoughts would be appreciated, Dwayne. Listen, I was going to rate you back, but I'm just going to tell you back. I would wait until after the election. No one's looking at the stock market right now. It could go one of 2 very different ways, and it could go a lot of different ways. And there's a lot of other things going on in the world right now. I think it's okay once in a while to say, I'm going to just take a week or 2 and just sort of step back, reassess, clear your mind. There's going to be a time to get back in, but it's not now. There'll be a time to sell, but it's not now. Many of these shares have higher to go, in my opinion. And the price of gold has gone up so much that the stocks haven't even really responded to that in the way that they should. Gold mining stocks are due for massive multiplication in their values. Gold mining stocks are due for massive multiplication in their values. And things change day by day, so we'll have to keep updating this approach. But I believe that coming up, there will be a time to start unloading some of the precious metals companies. I do not think it's anywhere close to yet. But I do think that the stock market is finally going to do what I've been telling you it's been going to do for such a long time. So the number one trading tactic that can make anyone easily a really good investor, much better than they were, is using stop losses effectively. And it's more of an art than a science. I always tell you guys that. It's very difficult, but it's also going to save you a lot of money, protect you from downside. You'll see. So say, for example, you buy a stock at $4 and you say, if it drops for any reason whatsoever to $3.75, I will immediately sell all of my shares. And sometimes the stock will head the wrong way and you want to get out quickly, taking the band-aid off right away. But if that same stock had gone the other way and had gone higher in price, you're locked in for all of those gains. You don't miss out on any of that. So you're minimizing the downside while being open to the upside. The big threat, of course, is that you get stopped out. You say, I'll sell all my shares if it drops to 375 or less. And it does. And then right away, you sell your shares, and then right away, that stock goes back up higher. You have to make sure that your stop is far enough away that the volatility, natural volatility of a stock isn't going to be stopping you out all the time. What I like to do is if there's a really solid support level at, say, $6, and the shares are at $6.10, I might buy into those. And if it drops below that solid support, which means that it is definitely changing its trajectory, if it's got a support level that's going to become maybe a resistance level, if it breaks through that, then you're going to want to get out of your shares, of course. But because of the support level, you're more likely to be getting in on that stock with a lot of upside and a very minimum amount of downside. I don't know if I've made this more complicated because I did a really bad job explaining it, but most people make things harder than they need to be. It does not need to be difficult. It is not difficult. Just think of it in these numbers I'm giving you. There's a lot of intricacies, and you can get into this a lot more, but the concept of a stop loss is just definitely, don't even worry about it. Don't even stress about it. You buy 5 different stocks at $3 to $8, and you have stops close on all of them, that then some of them drop to your stop loss and you get out of there, and sometimes those same stocks will keep on going lower. And that also has all your money, your cash, off the table so that you have it on hand so that you can then invest it in that same stock after it drops in price. You just basically stepped out as it fell for that whole time, and then you step back in. And if you want to be in direct contact with me, just go to peterleeds.com/insiders, become an insider, and you can email me anything you want, anytime you want. Don't be weird.